Hi guys, my name's Lance. I'm the Managing Director here at Driveline Fleet, and today I'm here to talk to you about operating leases. So what is an operating lease? Well, an operating lease is a rental agreement where the lease company looks to lease a vehicle to you for 36 months and say 75,000 Ks. It's a hand-back lease, so at the end of the lease you just hand the vehicle back. It's 100% tax deductible, and it's treated as off-balance sheet financing. Now you need to talk to your accountant about that one because there have been changes to the way that leases are being accounted for, so talk to them about the best way for you to go about this. It's no ownership, so generally you can't own the vehicle at the end of the lease term. But the key consideration with this from a benefits point of view is the cash flow advantages. So if you're looking at, say, a $40,000 vehicle, you might make payments of, say, $820 a month on a non-maintained basis. If you're looking at a comparable hire purchase, you could be paying well over $1,000 a month. So that's really the biggest key, is the cash flow. The things to look out for are excess kilometres. Excess kilometres is where you agree to 75,000 Ks over that period. You hand the vehicle back with 120,000 Ks on the clock, and you're going to be billed for that. Classic example would be 12 cents a kilometre as a kind of average. So that bill can get quite big. Refurbishment charges is where the lease company will bill you for anything that is not deemed to be fair wear and tear considering the age and distance travelled of the vehicle. So if you've given that vehicle a hard time and you've sent it back with panel damage and missing hubcaps and missing mats and damage to seats and all that kind of stuff, then you are going to be billed for that. Early termination charges can get quite expensive. If you want to terminate a lease 2 years into a 3-year lease term, then your worst case scenario would be the total of the outstanding lease payments. You can negotiate that back with the lease companies, and generally they will come back to say 50%, but just be careful with early termination charges. The key benefits, as previously explained, it's treated as a tax expense, just like going down the road and hiring a trailer from hire pool. You get fixed costs. You can have a maintenance option which can get quite handy. So if you want any more information on this lease, the other leases, standard, hire purchase, talk to the team here at Driveline. We've got an awesome bunch of consultants next door. They're fully tuned up to the benefits, the disadvantages, the best way for you to look at funding your next vehicle. Give us a call.